This is data from the CFSI, Center for Financial Services Innovation, so it's not our data. So this came out of a study that they did about a year or so ago. Even millennials who are supposed to be tech forward and so forth, about 45% of them, according to the CFSI, have used an alternative financial services institution. Now, is that because they're sort of anti-bank? I'm not sure, but they probably have the same cash flow constraint issues, and so that is kind of a backdrop. What's the problem? Well, the problem is the check, right? It's actually, all it is a provisional promise to pay, right? It's an old instrument, very durable, been around a long time, but the reality is, it's not really free. Banks are actually making a lot of money on overdraft because of the inefficiency of this kind of instrument. There's kind of a trap, and the McKinsey guy who presented this morning is kind of interesting. There's a bull case, bear case. I'm not sure where I land on that, but I think there's some inefficiencies where using technology, using mobile, we can actually deliver some value to the market. And why do we think that the market wants it? By the way, just to back up for a minute, I've been in fintech a long time. A bunch of people know me, and when I joined this company, the first thing he said, what the hell are you doing? Right? Checks are dead, right? I thought you were like the forward-leaning guy, always on the front of innovation. I said, well, guess what? Here's a hard problem to solve, and I think we can try to solve it on mobile. And it's not about just check cashing. That's the gateway drug, right? It's like solve a hard problem, get that consumer enrolled, and then deliver other transactional services to them. And we just announced that today. So we added bill pay to our app, so you can cash a check, split it up, and some of it can go to apply to paying a credit card bill in near real time. But checks aren't quite dead. It's still huge, right? I think Jan has a better number, but I believe in total there's still about $20 trillion of checks being written and about $5 trillion to consumers, right? I mean, I don't physically write a check, but I know I create checks to be written all the time because I use online banking and I pay everyone on that, right? CheckFree will tell you somewhere between 18 and 22% of all the payment bills that they pay actually result in a check being cut and mailed right to the payee. So there is a problem, and we actually think that there's demand. There's two sides of our business. We have a consumer-facing branded mobile app business, but we also have a white label enterprise business where we sell our risk management platform, our capabilities of guaranteeing that instrument to banks. And also to some AFS providers. One of our largest customers is Regions Bank in the Southeast. Very forward-leaning bank, right? Doing all kinds of cool things. One of which is, they integrated us into teller, into ATMs, and into mobile 3 years ago. And in that short amount of time, this is their data. 41% of their mobile depositors are opting to pay a premium, pay a fee for instant access and faster access to funds. Tells us that, because one of the perception challenges we have is, check cashing, that's for those other people, right? It's the underbanked, it's the people going down to Fifth and Mission. Guess what? They have a normally distributed account base, and these are small businesses, micro merchants, and consumers saying, you know what? I want my money right away. I don't want to wait 3 days. And by the way, you mean if I pay you this fee, you'll never take it back? It's guaranteed? Yes. So we power that for a bunch of folks. So why don't I show you a little demo? And by the way, just raise your hand. And pretty transparent. We'll answer as much as I can. Okay, so here's our app. Pretty straightforward. Our little tagline: "Take your money places." And I'll show you the menu. You know, it's pretty utilitarian. We do a few things. Cash checks, tell you where, you know, your history, what accounts you've linked to us for where the money needs to go. And then we just recently added a little rewards program. So let's cash a check. So really simple UI. Take a picture of the front, take a picture of the back. The demo's a little truncated. We also have a step that says, okay, now key in how much is the amount of the check, and then we come back and confirm it. Now this is done on purpose. It's a $100 check. I don't know if you can see the image from back there. We say, hey, is your check for $10? No, it's not. So correct that, put the right amount in, and then here's the, here's the UDAP piece, right? Now, as soon as you took the picture and started the process, we're already doing a bunch of stuff in the background, validating the check, pulling the maker information off, stuff like that. But before we do anything else, except, do you want to accept a fee? And we have a free option. So it's money in minutes, $5 minimum, or 1% for printed government payroll checks, 4% for anything else, and then money in days. Now, I always get this question, why 10 days? That seems terribly long. Because of two things. One is, there's no reason to have a super attractive function that cannibalizes the premium feature. And the second one is, believe it or not, based on daily cohorts of returns on checks and all that, we need actually at least 7 days to be about 92%, 95% confident that at least the check's gone through. That doesn't mean that return might not come back. It still could come back, 180 days later. If it's an IRS check 5 years later. So anyway,
So Dickson?
Yeah.
Yes. If you choose the 10-day window.
Yep.
And you do get a return in that time,
Then we'll back out.
not funded then?
Right, we'll back out the transaction. But if you don't get a return, that's also guaranteed.
What is guaranteed, I'm sorry?
The check is always guaranteed when we approve it, so whether it's in minutes or in days. Obviously, if it's in days, we have a chance of backing out and say, well, we gave you a provisional approval, but actually your check returned, and so take it back. We're not going to fund. But in the minutes, as soon as we say yes, and you accept the fees, and you tell us where the money's going to go, it's gone. That's our risk. So, we split that check. We say, hey, I'm going to put some money in my allowance account, but I want to put $20 in because I'm going to go on eBay. I'm going to buy some stuff. So I'm going to put the balance directly in my PayPal account. And so then we do a final confirmation, right? $100 check, $5 fee, and then you disperse the $95 against 2 accounts. You could also pick a credit card bill that you've linked and pay a bill with it as well. A feature we just rolled out as well is we've been offering a referral friend bonus. So this particular user has racked up 3 bonuses, all worth $4 a piece. He just claimed one, and so now we're going to review the check. Now this goes into underwriting. Usually it's pretty fast. Once you're approved, this is our sort of, when you think about it, it's really straightforward, but it's our little innovation. As far as we know, no one else is doing it. We file a provisional patent for it. Is, before we fund you, take the check out of circulation. Send us a third image with void written across it. For those of you who are FIs who are doing remote deposit capture, this nasty little problem is actually starting to rear itself. Duplicate presentment was our largest cause of loss, but we've licked that problem. There's still other issues, but anyway, so send us the voided image. That's also scanned and reviewed. Is it really the same instrument? Was void clearly written, in ink? Okay, void's on there. It's good. Congratulations, you're good to go. We just deposited $99. So there you go. So that's what we do. Happy to take questions.
Do you instruct the user to write void after you've guaranteed? So if
Yes.
the point where you suggested or that you required them to write void across this check.
We don't do that until we've approved it. right? So we're saying, hey, we're going to take this risk. You're approved, and then before we fund, send us a voided check. And interestingly, when we rolled it out, we were really nervous. We thought we'd get all kinds of abandonment. Less than 2%. In fact, we have people calling customer service thanking us because actually sometimes duplicate presentment is really an accident. And so far it's working out. It hasn't created the kind of friction that we were afraid of. Yeah.
Do you actually match it to see if it looks exactly like the check that they deposited?
Mm-hmm.
You do?
Mm-hmm. And then, it all gets turned into an ICO, and we use check 21 and deposits and goes through the clearing process and all of that.
So if you don't approve the check and you're
They
approved
still have the
for
check.
10 days,
Yeah.
is it at that point when they have to send you another image?
Yeah, we say, hey, congratulations, you're about to be funded. Just send us an image, money gets released.
And then if it's not, they get a too bad message.
Yeah,
Too
hey,
bad,
sorry.
you're not getting your money.
Right, sorry, we couldn't approve your check, but now you still have a valid check, right? Assuming it's actually good.
So they could re-present it.
Yes.
At that time.
Yeah, because we haven't taken it out of circulation.
Even though it says void?
No,
No,
the
no,
void only
it's not
happens,
in there.
Yeah.
only happens the instant before funding.
Before funding.
So if in the delayed option, let's say it's day 7 and it returns, right? Because we submitted the image and it's actually no good. So we'll contact the consumer and say, hey, sorry, we can't honor this check. You still have your physical check. You're welcome to take it somewhere else.
When you say cashing your check, they cash a check and they have the cash in their hand. So what happens to the money when you cash?
I'm sorry, I missed that. So it's digital cash. We're posting credits in near real time using the card rails to your bank account. We can reach about 95% of all bank accounts through a combination of either Visa's OCT, MasterCard's Money Send, Star, Pulse, Nice. So money goes in as a real-time credit, or we can post to your prepaid card. There are a lot of our consumers, check cashing consumers, are using prepaid predominantly. They're banked, but they're actually using that as their instrument. Or you can post to PayPal. So all of that is in near real time. So it's safe to spend, so it really is cash. Because you're never going to hear from us again. You got the credit.
So, do you have statistics that show you users versus me going to a bank and perhaps presenting the check for deposit, or even through remote deposit capture, where I may have a hold placed on my account,
Right.
and I won't have access to my funds for under Reg CC guidance?
Right.
Do you have any statistics showing? I mean, how do you know what your average profile of your user of your product is?
Well, because we are sponsored by a nationally chartered OCC regulated bank, we abide by all the BSL, AML kind of requirements. So we KYC all of our enrollees, our customers, right? So through that, we have some sort of demographic info that we can pull. Our typical consumer, we have really 2 segments: consumers and micro merchants, small businesses. In fact, I just did some focus groups with some of our most profitable customers, which are the people who are cashing 15 to 30 checks a month with us. That's not a consumer. Well, this is a great one. It's midweek classics focus group. This person came to be interviewed and she's telling us all about why she uses us. She's a single mother. She cleans houses, but she's very tech forward. She's posted on Thumbtack and Craigslist. That's the demand gen, regular customers. Interestingly, we asked her about the different features. Yeah, I know you guys guarantee, but I know my customer. I don't care about that. What I do care about is I don't have time to go to the bank. I don't have time, and I'm not, and I'm okay with paying a fee for instant access to funds, so that I can just get on with doing my thing. So statistically, Actually, I looked at this data. Our customers kind of household income about $68,000. We don't know gender. We cluster in that, and probably because just the recency of our business in all the tech centers, so California, New York, Texas. Interestingly, we have a huge number of users in Florida. But to your question, compared to are they choosing us as opposed to normal bank RDC, the only data we really have is like the regions data, right? There's a bank that's offering it, and 41% of their customers are choosing to pay a fee for our access. And by the way, any retail bankers out there looking for revenue, right? There's non-interest revenue. They're making a lot of money, right? Because we sell it to them on a wholesale basis. By the way, we take all the risks. They do the marketing, they do the settlement and funding, but losses come to us. And they're doing well. They're doing great, actually. Yeah.
Is the fee a fixed $5 fee, or is it based on the amount of the check?
It's the $5 a minimal, so that's fixed. But it's amount of the check. It's 1% for printed government payroll checks and 4% for anything else. Yeah.
Do you have any stats on how often somebody's depositing their own check or cashing their own check? So they took a check from their own bank.
Our system rejects that, so you can't write yourself a check.
Not even from another account. When you say rejects, then
So
it's
there's
looking at the
there.
address and they.
Yeah, we may not catch it, but we try to.
We're done.
All right, are we done?
So it's virtual.